All right, welcome back to the economics of real estate. I'm Dylan Silbernagel. That's Matthew Gizzie. This is the time of the month where we break down all the market stats from the Toronto Real Estate Board. We take a look at everything that's been happening in the news, any policy changes, and we break down what you can expect to see in your local real estate markets. Matt, how are you doing today, buddy?
I'm good, pal. I'm good. Big election out of the U.S. shook a lot of things up. Some markets are starting to rip, other than housing markets. Be interesting to see how that's going to translate into the overall economy, especially Canada's. We're a little bit different than them right now as to where we're at. They look like they're still ripping. We're slowing down a bit economy-wise, but I'm interested to see how this plays out over the next couple months.
Yeah, you and I have already started the discussions on what we think the election results are going to do for Canada, specifically when it comes to our housing market. It's something that it'll be an ongoing discussion as we keep going through. Between the two candidates, obviously with Trump winning, we looked a lot at their spending policy when you and I were speaking last week on one of our videos. And I think we can expect more spending coming from his camp than what we were expecting from the Harris camp there. And we'll have to see what that does for us and what it does for the economies, specifically when it comes to our interest rates and how much we can deviate from the US.
Yeah.
That's just something that we're going to have to keep talking about. All right, coming up today, we're going to take a look at showing volume stats. One of the first things that we want to look at is, are people coming out to see more houses? Are we going to see buyers re-entering the market? And thanks to Broker Bay, which is the booking system for showings on the Toronto Real Estate Board, we are able to take a look at that data and see, hey, is showing activity increasing now since we've had our 50 basis point interest rate cut when we're looking at there from the Bank of Canada, as well as, it's funny, Matt, the amount of people that you talk to that say, I want to know what's going on with the U.S. election before I do anything. And it's funny that there is that, that feeling out there where people are waiting for results like that. They are waiting for big news like that before they make big decisions sometimes. So,
Well, yeah, absolutely. And policy changes from certain governments, and especially the World Reserve, the most powerful government in the world, you kind of want to know what direction and what they're thinking.
Yeah. So we're going to see if showing activity is increased because of that. We're going to, of course, take a look at the broader overview from the Toronto Regional Real Estate Board, as well as watching average price in comparison to our inventory levels, taking a look at some of those interest rate predictions, where we think we're going, what's left still to come, as well as, of course, breaking down our municipal and regional markets, which Matt and I take painstaking effort to break down all the data and create the charts for, specifically to help our clients and help the agents that are in our office start to evaluate where we see opportunity, as well as making sure we can properly market those listings for sale. All right, Matt, let's jump right in and start off here with showing stats. This is specifically now looking at Aurora on a weekly basis. So if we come in here, where you see we had wrong chart here. As you see where we had the high there so far for this last half of the year was definitely in September. The second week of September, everybody came back from holidays. Saw a great boost in showing activity with 1,000 showings a week. And really after that interest rate cut, we just kind of plateaued. We increased a little bit there at the start of October, but we're at a much lower rate there at 743 showings on a weekly basis. So it's interesting. I think we're still looking at the lag effect. Not everybody jumped into the market right away. We did see a slight boost in showing uptick, but still down from where we were in September. And it's funny, Matt, because if you talk to agents out there, they can feel the difference. There's a lot of agents that are talking like, hey, I've had a property that was sitting and now I got multiples on it out of the blue, or I had no showings, now I'm getting some showings. But when you look at the broader overall data, it's not being felt by everybody just yet.
Well, I think too that it's possible that we're just seeing a lot of very interested, qualified, no tire kickers out there buyers that are looking potentially right now. Because, as we'll see later on, we are seeing a little uptick. We're seeing a little excitement in the market. Showings are still on their low side. So does that potentially mean that, the quality of individuals in those showings is much higher than what we've seen before?
That is a great point. On one of our most recent listings, I think we were 4 showings before we got an offer, right? Which is super low in comparison to what we've been used to for the last 2 years. And even here, looking at the average for Aurora, you're looking at an average of 27 showings before a property sells based on the data that they have to use. And I can tell you that in our experience on the other end, on the other side of that, we've got a couple right now that are vastly outproducing this number. And like you said, showings may be down overall, like in comparison to where they were, but we've got more qualified people. We've talked about this before. It's more of a needs-based market. People are out there moving because they have to. The world and life doesn't care what the interest rate is. Stuff happens. People need to move. And I think that if you're out there shopping, it's because you need to move right now. So that makes a lot of sense to me. And I think that was a great point that you brought up, that it's the more qualified people that are out having a look. When we fly over to Newmarket, numbers are a little bit higher and a little bit tighter in comparison to our gap that we saw in Aurora, but a nicer increase there, 965 in terms of the high for a weekly showing after the rate cut in comparison to that 1,050 from after the summer break.
Yeah, I think it's a lot tighter. Newmarket's really shown us this year that it's a destination that people want to go to. We've seen really strong sales. We've seen a lot of strong activity from Newmarket. So I'm not just surprised to see that that showings are up in Newmarket as a lot of people want to call it home.
Yeah, and so they're hovering there at 26.2 showings before home is selling. Aurora at 27.4. So similar data, off by about a showing, but nonetheless, higher showing activity right now in Newmarket. I think that's fantastic to see. When we take a look at the overall market for the Toronto Real Estate Board, we are seeing that slight uptick there in average price, 3% increase month over month. Big month over month change in terms of transactions at 33%. Quarterly up 24%. The annual, this is the one that was going around the news, 43% change in comparison to our transaction total for October last year. And Matt, you and I have talked about it, this is a great number, but you got to remember where we were last year.
Well, you know what? When you go from 1 to 2, it's a 50% increase. So when you're dealing with smaller numbers, sometimes the increases can seem quite drastic, right? So we're coming off some pretty big lows in sales. So this is why we're seeing such a big uptick. It's still a great sign that we're seeing this uptick for this particular market. As long as we're going to keep going in that right direction, it'll be great. The only thing I worry a little bit about is we got November and December coming up. Yeah. Seasonally, typically, these are slower times of the year for transactions.
Yeah, and I did pull this knowing that we were going to have this conversation and saying that we are currently at 58,435 transactions for the year, and we finished last year at 65,877. So if we finish out November and December with exactly the same amount of transactions that we had in November and December last year, we'll equal last year's number, which is a good sign. To be honest, if you'd asked me at the beginning of the year, I thought we would have passed it. I kind of was predicting that we were a little bit more through the struggles, but we weren't quite there. And I think the rate cuts, when they first started happening, we didn't see the desired impact of everybody coming back to the market quickly. They'd been high for longer, and I think I just underestimated that amount of impact. But now I think we're truly leveling out. This should be the bottom in terms of our sales volume, which, as we know, will impact pricing.
I think your prediction likely would have been right had the Bank of Canada cut rates earlier. I think there was a lot of people thought that rate cuts would have started earlier, but the data just wasn't getting itself under control, so they had to wait longer and longer. And I think that's ultimately what slowed down the markets for a little longer than everyone had expected.
That's so true. I remember in January, we were getting higher predictions that March would be a cut, and it didn't end up being that way. Everything did take just a little bit longer. When we look here at our average price, it's funny, this chart, we haven't had the HPI benchmark price updated, which is a little bit more accurate in terms of what comparable homes are selling for. So it'll be interesting to see how this has moved. But looking at our average price, we've seen that rebound from August, and it's kind of finding its way back up now, consecutive months in a row.
Yeah, it'll be interesting to see if it crosses over. And I'm just looking in the history of when typically the HPI crosses the average home sold price, to see if there's any clues as to when they go up. And there's a couple spots, if you look in the middle there, where there's been some price increases there when it does cross over. And we can already see prices are starting to move up. Are they likely going to come down November, December, January on a benchmark? Probably.
Hmm.
But I think it's a great sign that potentially February, March, April, we're going to have a really a much different market in 2025 than we did in 2024.
Oh, absolutely. And I think that'll be interesting to see as we break down what our rate predictions are that we're seeing as well from the market. Total transactions, yet we've seen that turnaround now. We are trending upwards a little bit. November typically we'll see this dip again, same with December, but who knows if we're picking up some momentum now, maybe we get a little bit of a lag from people that were intending to do something this year that haven't as of yet, because of those cuts being delayed.
Well, the last 2 years on that chart, we haven't seen an uptick at the end of the year. We only saw two big upticks at the beginning of January,
Right.
February, March of 2022, and around the same time in 2023. What we saw was a smaller uptick in 2024 at the beginning of the year,
Hmm.
but that's a nice uptick to finish off the end of the year. Are people just catching up to what they would have done before earlier in the year? Maybe, but I think this is a good sign that this chart is potentially bottoming out and we're going to start heading back up now.
Yeah, and it's funny if you take a look back at the years prior to the interest rate increases, because 2022 is when that began, we did see those fall increases, right? And 2020 is interesting enough as the world was ramping up. Really, we were having a really busy spring. COVID happened, sales volume dropped off, and then it never looked back, really, right? And you see those fall increases, and then the tapering off in 2021. Wild times. It's still crazy to think that COVID was not that long ago in the
Yeah.
grand scheme of things.
Yeah.
All right, talk to me a little bit here. We've kind of talked. This is a similar chart that we've looked at. We've got our sales volume with the uptick there that we're seeing at the end, obviously down from the highs. I think if you look at where we stand in comparison to last year, we're in a pretty good spot to say that we're leveling out. That I think that we've kind of found the bottom in terms of where our sales volume is going to be.
Yeah. And I think the importance of this chart too is to show, historically we're still really low on transactions here. So yeah, we're starting to move in the right direction. It feels like there's a lot more activity, a lot more interest in the market right now.
Yeah.
But we still need a couple more months of data points to make sure that we're heading in the right direction.
Yeah, absolutely. Average list price, or sorry, sale price, of course, we are up again this month to that 1,135,000. Sorry, 1,135,215.
And I
Active
just
list.
want to highlight too about these
Yeah.
charts. These are GTA, all of GTA, all housing types.
Yeah.
So yeah, we can see where we peaked out in 2022, and it's been steady. You're gonna get these ups and downs as certain like typically, first and second quarter of the year are going to be a lot more productive than the last two quarters. Um, so I'm interested to see what happens November, December. I do think we're going to be stronger than last year,
Yep.
and we'll see if the prices can get up to where we've seen them earlier in this year. I think that'll be a great sign for next year.
Yeah, 100%. And again, it'll be interesting to see where we end up sales volume wise. If that push that we see in November, December, does that get us over the hump of what 2023 was?
Mhm.
Active listings coming down a little bit last month, which is some nice relief for sellers out there. We're still at record highs in terms of listings that we have available to go out and purchase right now. And again, this is across all home types.
Yeah, and this is the elephant in the room. If you want acceleration in prices, and to be honest with you, a nice stable increase in prices would be nice. But if we're going to have this amount of homes sitting on the market, we need this to get cut down back to its historical norms,
Yep.
before we can see any significant price acceleration in the market.
Yeah, because even if we look at, kind of in this chunk, in this range right here, we've got to lose, 8 to 10,000 active listings to get back to this, right? So
Yeah, and don't forget, after 2017, we had a really slow market from 2018 to just before 2020, and
yeah,
even those levels were, what are we at? Probably about 2,100, 2,200. So we've got an additional 3,000 properties on the market
mhm,
right now,
yeah,
compared to even a slower time, which was the 2018, 2019.
yeah. And it's funny. It really, like, it was nice to get away from that 2017 market, but it really wasn't till after COVID that we really saw that ramp up in pricing, right? So here's how we peaked out in 2017, right before the Fair Housing Plan was announced, come down in price, and it was just kind of trucking along, right? It was trucking along, and that really wasn't until COVID that we started to see those extremes in terms of the price increase.
Yeah.
New listings again coming down just slightly, which is I think where we've seen that active listings taper off a little bit as well. So seasonality is coming into a play. I think the end of the month always comes into play a little bit there as people wait and then relist, especially those that have been on the market for a little while, waiting for the market to turn around. And it's been a little sluggish in terms of that bounce back, but October is showing the first glimpse there of what might be to come. All right, Matt, talk to me a little bit here about sales to new listing ratio. So we're down to 40% now, it looks like.
Yeah, so sales to new listing ratio. So this is periods where the sales to new listing ratio is above 60 will represent a seller's market. So we've seen in the past, 2017, 2021 to 2022, we've had, those are full-blown sellers markets. So this is a fantastic chart to kind of see where we're at. Now, as we were talking just about the 2018 market, you can see that we weren't even below 40% at that time.
Yep.
And only really now have we actually reached since 2011, we're out of the buyer's market now and into a balanced market. If we look at, what this chart goes by, 60 above is a seller's, 40 below is a buyer's. We hit that last month or the last 2 months. But now we've come out of that. We're above the buyer's market
creeping up just
in more of a balanced market. But looking at this chart, you can just see how much the momentum in the market really shifted to the downside over this market.
Yeah, it's interesting to take a look at charts like this because so often we're just looking at sales volume and price, even with the little blips that we have along the way, tends to just be this mountain that's going uphill, right? It just kind of, you're trucking up there. And here, as you see the market changes, you can see how that reflects to them the drop, right? And then they climb up and then the drop, as we saw in those two very specific times.
Yep.
All right. I think this is an important one because honestly, I think part of the reason why our first 3 cuts there didn't have as much of an impact, especially the one in September there, was that there was news coming from the Bank of Canada saying, hey, there's more to come, and I think we've got a big one on the way. And really, that's what happened with our 50 basis points cut there in October. And so I wonder how many people are sitting on the fence in the sense of like, okay, I see that the market's changing. I'm ready to get back in. Because there's a lot of realtors signaling like, hey, guys, you've missed your chance now really on the true buyer's market of where inventory levels are sitting. We're coming around now. And honestly, when the GTA housing market does come around, it usually comes around quite quickly, and it's very hard to time the bottom like that. But with that being said, I think that there's still buyers that were sitting on the fence and being like, well, why should I buy today if in a month from now or a month and a half from now I can get a mortgage at 0.5% less, right? I'm wondering if that has something to play with buyers coming back into the market. And this chart specifically, it deals with some of those predictions on when we might see more cuts.
Yeah, I agree. And you know what? There was some talk that December could see another 50 basis points cut. And if you're going out putting offers on properties right now and you're not going to close until after the cut, you're going to potentially benefit from that cut if you're thinking about doing a variable rate mortgage short term to lock in potentially even cheaper fixed rates later on. But what we're seeing from this chart is the market is kind of telling us, well, you know what? It's possible we could get a 50 basis point cut, but right now the market's leaning towards a 25. Yeah. We should see another 25 basis cut in November, bringing us down to 3.25 on the overnight. And then it looks like by March, we should have a third cut. So by March, we should have about 75 basis points cut. The interesting part about this chart is we might only get one more cut for the remainder of the year after that. As you can see, all the way out to December of 2025, there's a 57% chance that it'll be 3% and a 43% chance the overnight rate will be 2.75. So, It's definitely one thing to consider for people. This is a great chart to look at and try and plan. The data changes all the time, but
It does.
it's a nice thing to have. So right now, this is telling me 3 more 25-point cuts by March.
By March. Exactly. And I think that's the high level takeaway from this. That's all you really need to know. You and I were looking at this earlier. We had data of October 31st. I think the percentage of the at the 3.5, I think we were looking close to like 60%.
Yeah.
Yeah, 60-40. So much higher there that they were anticipating that it would just be the quarter point. This has shifted just a little bit, but still favoring the quarter point. And then by January, they're highly predicting that we're going to be down to the 3.25. So whether we get 50 in December or we get 25 in December and then another 25 in January makes a lot of sense. And then 91% chance that by March, we're down to the 3%. So like you said, there's our 75 basis points by March. And then highly likely that we're staying at that level for quite some time. Really by the end of the year, by the end of 2025, still only a 43% chance that we're down to 275. But like we said, this changes all the time. There's been some stuff going on south of the border. There's some of our reports that have come out. Who knows? By next week, this all might be moot.
It could be moved. It could be moved even tomorrow as the U.S. reports their CPI numbers. There is some talk that they might come in a little bit strong. And if that happens, we'll see what the numbers change on this chart, and we'll update everyone definitely on if there is an impact on future rate cuts in Canada potentially.
Yeah, absolutely. So talk to me a little bit here about our bond yields, because they have come down, but I swear every time we look at this, there's a slight uptick.
Yeah, last couple weeks, we bottomed out, but here's the thing: the strength in the U.S. Donald Trump's getting in. Donald Trump's going to cut taxes, business taxes. He's going to cut everyone's taxes, and he's potentially going to add another $7 trillion in spending to the deficit. So at the end of the day, that's an economy that's going to be roaring, and you can't be lowering interest rates into hot economies. You only lower interest rates into economies that are struggling and need the help. And that's why Canada is doing this, because our population is significantly in debt and they need to be able to service their debts. Whereas in the US, they're not as in debt as us, it seems. So what we're seeing with the bond market, which affects the fixed rate market, is, you know what? We're kind of happy where we're at right now, based on what we're seeing in kind of a global economy.
Yeah, and we've talked about this being the smart money and kind of pricing in some of those cuts beforehand, as we know that this impacts our 5-year rates more directly, of course, than the Bank of Canada does. And yeah, I think, like you said, they're saying, hey, let's post up here for a minute. We don't necessarily need to keep going. So again, important to watch. We had another chart that we did last week where we talked about where the variable rate and the fixed rate, the 5-year fix, finally flip over, where it does make more sense to be on a variable again. I want to say the prediction for that timeline was kind of around summer of next year. I'm wondering with that Bank of Canada forecast saying now that 75 basis points by March, I wonder if that changes, but we'll have to continue watching this bond market as well.
Mm-hmm. Yep.
Beautiful. All right, let's jump right into our regional and municipal markets. Taking a look at York Region across all home types, we did have a slight increase there in terms of median price. So we're up 3% month over month. Sold listings up. And again, this should be a story that you're going to see in a lot of places, because we saw that at the overall, when we're looking at TREB, transactions finally up, which is great to see. And then a month over month basis, we're seeing that as well in York Region. New listings coming down a little bit. We did notice that on those charts as well. That brought days of market down a little bit. Our months of inventory as well down just a little bit, and active listings down just a little bit. So it's interesting to see that come through across all home types in York Region. And when we take a look at our freehold markets and breaking it down by price category, right up to 1.5, you're still looking pretty good for sellers as we're looking at our months of inventory. If we look at our green tabs here, around 2.4, 2.2, 2.1, it's not until just under 1.5 that you get to 2.7, and then finally switching over the 1.5 market. And this is true in Aurora as well, but it's interesting to see that it's not bad out there in the freehold market, specifically in your region right now.
It's not. And to highlight too, every single category for solds in 2023 and 2024 saw
On
a
increase.
decent uptick here
Huh.
in York region. And for anything under 1.25 million is in a seller's market right now.
Yeah. Yeah, and seen big jumps, 151 to 233 sales, 161 last year to 214 this year, 68 sales in our 750 to million range, up to 136 this year. Strong numbers, strong increases. Of course, at that higher price bracket, we are seeing months of inventory increasing a lot. But I gotta say, York not looking that bad at 8.7 in comparison to some of the other ones that we've done. And just so you guys know, we are not taking the 12-month average that you see on the Toronto Real Estate Board. We compare it to the market that it's in currently, because when we were looking at those 12 months averages, they just didn't speak true to what was available out there. So there was sometimes it was saying it was a 3 months worth of inventory, and then you'd look in that pocket and there's 200 homes for sale with 5 sales last month. You're like, it's not holding up. I understand the desire for the rolling average, but 12 months is just too long in our changing market right now.
Yeah.
All right, Aurora, slight decrease there in our median price, funny enough. And, as we look at some certain areas with the market picking up, I've been watching the townhomes in Aurora a little bit, and there's a bunch that are still sitting that just haven't moved. So yeah, it's interesting to see. Again, we're talking across all home types here. So just because overall the market's gone up and we've seen a slight increase in price, it's not everywhere. You got to make sure that you're focusing in where are we seeing the opportunities and where are we still seeing some challenges. Obviously, sold listings up, which is great. New listings up a little bit more here. Days on market was down just slightly. Months of inventory down as well, and active listings down just a little bit. So interesting to see that median price didn't move too much.
Yeah.
Taking a look at our different market segments, and Matt, we just coming off of York region, and it's funny because this chart tells the story of the first page that we were looking at for Aurora. When we're looking at our sales volume change from 2023 to 2024, not as drastic as what we saw for overall York.
Yeah, not as drastic, but I want to go back to maybe why we saw the 8% reduction in sales price. We can see how tight that market is, 1,250,000 and below. We can see that a million below is a 1 month or a 1 month of inventory, and 2 months in the second category, and even up to 1.5 is very tight. So I'm wondering, we just saw a lot of homes in those lower price brackets in Aurora finally sell. People had the extra space now due to the interest rates cuts that have happened, and that's kind of what spurred that kind of activity. But looking across the board here, decent year over year sales for Aurora, but we are seeing anything 2.5 million above. We've got a pile of stuff out there that's been sitting.
Yeah, no doubt. And I think you're right. I think that's where we're seeing that breakdown in terms of the median price. All right, taking a look at new market, again, just slightly off there in median price. Sold listings exactly the same. Funny when that happens. We always have to check our numbers like 3 times because it's just funny to see. New listings down just slightly. Days on market down. Months of inventory down a little bit, but higher than what we saw if we go back to, it's 3.6. So they're pretty spot on. And active listings down just slightly like we saw on the Toronto Real Estate Board. So interesting to see. I do think that we will see an increase in sales volume for new market when we're looking at some of the other data that we were seeing there, especially with their showing uptick. I will not be surprised to see new market improve when we do this again next month.
Yeah. And also back on that chart as well, all those metrics are moving in the right direction to start moving the price higher as well. The active listings are falling, months of inventory are falling, new listings are falling, so that's a great sign for new market.
Yeah, absolutely. Coming over to EG, I'll let you take away this one as I know you put it together for us.
Yeah, absolutely. So the median sold price was down actually 12%. We had 48 listings, which was up, 48 solds, which was up 85% month over month. So that was a huge uptick East Willenbury saw. New listings down 24%, and the days on market actually increased 26% to 29 days. Months of inventory down almost 50%, which is a great sign. And active listings down 5% at 196.
It's funny, we'd seen people flocking throughout the year to EG and Simcoe where they're finding a lot of value for those buys. But we've also seen them fluctuate the other way where they've had those little hiccups where they started to slow down and not quite the same impact there. And it's funny here looking at our 0 to 750, though we've seen activity in that market earlier in the year, it's seemingly to disappear now. It looks like it's just the few that have been listing there, not so much selling there, though we did have 2 this month. That I think it's going to be time that we pull this one off the chart.
Yeah, I think 750 to a million had a huge month compared to last year, going from 4 to 17 sales with just 20 active listings. So we're down to 1.2 months of inventory basically under $1 million there. So that was a good sign to see. But I think that's just the effect of the interest rate coming down. You're starting to see people under $1 million, under 1.2, really start to jump back in the market because the numbers for them are really starting to make sense again.
Yeah. Yeah. And you know what will be interesting to watch? But I mean, the mill to the 125, we saw the drop off, right? They moved from 11 last year to 7 this year. And then you've got the uptick on the bookends of either side, 750 to a million, huge increase, like you said, 4 to 17, and then 3 to 15 on the bookend above it at 125 to 15. So it's almost like that kind of little price bracket that got forgotten as things start to separate. And we talked about this down in Richmond Hill a few months ago, where it was somewhere, and in Aurora as well, I think around that 1.75 mark, it just disappeared as everything had dropped down below that and the few that had maintained above it. So, it's interesting to see how those start to separate.
Yeah, absolutely. And again, another chart with 2 million plus where we didn't even have a sale last month when it's supposed to be this uptick hot month. And we've got 29 homes on the market. So again, I think a lot of these charts are suggesting that some individuals, the interest rate cuts have actually started to make sense for them to jump in the market. But when you're looking at the high end, you're going to need a lot more interest rate cuts to get those markets potentially moving a little quicker.
Agreed. Coming into Georgina, same thing, just a slight decrease there in our median price, a little uptick in our sales month over month, new listings down. It seemed like everybody just wanted to hold off for October. They're like, I wonder if November is going to see a big boost in new listings. I'm wondering if it was more so because the interest rate cut was at the end of the month, if people saying, I'll hold off and, I'll list in November.
Yeah.
Because it's been true across the board, like we saw for overall of Treb, that new listings down just that little bit.
Yep.
Days on market uptaking a little bit. Months of inventory pretty high up there, and active listings down just a little bit. And of course that makes sense as we had some increase in sales, but a slight decline there in new listings. So again, we're seeing upward trend from where we were last year, but pretty stagnant as we get over the million mark. Not too much happening there. Kind of interesting to see, and higher months of inventory in comparison to what we've looked at, a little bit further south.
Yeah, it's going to be interesting to see how there's a tale of two markets here. It's anything below 1.25, well, not in Georgina, but most markets that are closer to the city, they're moving nicely. But then there's this other side where, if you're priced over 1.25 or 1.5 million, you're not getting the level of activity that everyone else is. So either there needs to be some price adjustments there, or you've got to wait a little bit longer for those interest rates to come down more so that buyer pool has a little bit more incentive to come your way.
Yeah, and I mean, when you're looking at 49 available listings with only one sale last month, I think waiting for the interest rate, of course, doesn't make the sense. It's got to be an adjustment in the price to get some of that stuff moving. Or we really see a fluctuation here, and then you start to see everybody trickle up a little bit. Right? I think that there will still be negotiations coming down from price on the overpriced listings, but as this, continues to trickle upwards, maybe we start to see some of this clear out. All right, coming down to Richmond Hill, bigger difference there in median price, and it's so funny to see this because I was watching a couple of little pockets like Westbrook, And they did have a little boost. So it's holding true for Richmond Hill at the moment, where they saw that increase. Uptick in solds as well. New listings down a little bit. Days on market, of course, coming down because of that sales and lack of the new listings there. Months of inventory decreasing on a month over month basis, while our active listings came down as well. So good movement there in Richmond Hill. And again, when we talk about anything under, it's funny, under 125, when we're looking at freehold stuff in Richmond Hill, it's hard to find anything under 125 these days. That's why our graph has moved over so much, but still holding true even up to the 175. They're just a little bit over the 3 months in terms of months of inventory. So not bad. Decent.
Yeah, I was a little worried about Richmond Hill over the last couple months. We'd seen a lot of these statistics slipping for them, so it's nice to see that. I think prices probably got down to a level where a lot of people were willing to jump in, and we're clearly seeing that in the data.
In the data, yeah, 100%. I think it's just the accumulation of those couple downward trends that we had for those months. Things starting to balance out, people seeing value in Richmond Hill again, and then taking action. That makes a lot of sense. All right, condo market, slight uptick, though the numbers are very similar to what we've seen in recent months. Coming in median price there at $624. Sold listings up just a little bit, 2.4% month over month. New listings increasing here as well. Interesting, the one spot so far that we've seen where we're getting more listings hitting the market is the Richmond Hill condos. Average days on market coming down a little bit. It's still high months of inventory. Not the highest we've seen, but still high, and up just a little bit month over month. So, interesting to see just in general. Richmond Hill condos seeing that little increase, because it's funny, Markham didn't see that increase last month. We actually saw a decline there in our median price for our condos. Sold's up a little bit again, 73 units sold, up 7.4% month over month. New listings, more listings just continue to hit the condo market. A market that has struggled. And it's funny, as you talk to realtors, even realtors in our office, the amount of condo sales that everybody seems to be doing this year, as there have been more and more people putting their home on the market, putting their condos on the market.
And not only that, there's still a lot of condos that are going to be completed over the next 2 years that are going to be added into this pool as well.
Yeah. And more pre-con stuff coming to the market as well, both in the condo and freehold, but specifically I'd say the condos, the amount of stuff still coming down the pipe. All right. Talk to me a little bit about Simcoe there, Matt.
Yeah, Simcoe, we had price was down about 0.5%, 767,000. Sold listings were up. We had 660. New listings were down 16%, so 1,718. 38 days on market. So out in Simcoe, it's properties sit there for over a month. Yep. And that's been like that for most of the year now. But it is down 10%. So we are starting to work our way down. Months of inventory down 20% at 5.2. Nice. And you know what? It makes sense that we're starting to see some more activity out there, because these are prices that a couple of rate cuts can definitely entice people to participate in. And then active listings, again, down 6% to 3,436.
Yeah, 3,436. That's, let me go back to, you're looking at Richmond Hill with 888. Georgina, of course, some smaller markets there, but it's just crazy to see how many are active there in all of Simcoe.
Yeah.
Right?
Yeah, and when we go over to the Simcoe freehold chart, we can see, where we're seeing in a lot of other markets where there's 1 or 2 months inventory on the lower end, we're still at 5.6, 4.4, 5.4. And then on the higher end, we're up there past 10 months of inventory. So there's still a lot of inventory on the market in Simcoe. So the price is going to likely still stay relatively similar until some of this inventory gets cleaned out.
Yeah, absolutely. Maybe even some adjustments still to come for those people that need to sell. When you need to stand out in five plus months worth of inventory, it can be a challenge, and it ends up being the situation where buyers aren't just looking for market value anymore; they're looking for the deal, which makes it that much more challenging for sellers and agents, because you can price a home right at market value, think you're looking good, and a couple more homes come out for sale, and there's just too much choice. Buyers are not feeling motivated to make a decision, kind of shopping around, and it really is. Hey, if you need to move quickly, or even if you just want to move, you gotta price in a deal there for somebody to stand out in comparison to the 10 others that they might be competing against. And again, looking in all of Simcoe, even that 0 to 750 right now, 668 available listings.
Yeah.
All right, Barrie. Yeah, slight uptick in median price. Interesting enough to see as we get local for Simcoe. Sold listings up a little bit. New listings down just slightly. Days on market down. Months of inventory down. Not a bad month for Barrie. Not bad at all.
Not bad at all. And
yeah. Yeah. And again, you see that increase year over year in terms of both of those lower price brackets. And I mean, even the million to 125 seen the jump from 5 to 16 sales. That's not bad. I mean, you're looking at a higher months of inventory, but yeah, your 0 to 750 where you'd expect it, super low, nice and tight at 2.1. And then your 750 to a million, when you're in Barrie, 3.6 months worth of inventory. It's not terrible.
It's not terrible. It's just over. It's just in a balanced
Yeah.
market, just above its sellers. And so there's some good strength there in Barrie, which we haven't seen in a while.
Yeah. And then once you're over that million mark, though, we start to see the months of inventory really start to stack. Especially once you hit the 125, with 37 available listings, only 2 sales last month, 18 in the 1.5 to 2 million market. It's still hitting 15 units available, still quite a bit, for Barrie. So interesting to see what's going to happen with them. Like we said, overall, when we're looking at how they posted last month, not bad, but this is the area that we're seeing it in. We're seeing it in those lower price brackets. Absolutely. All right, popping over to Durham, where Durham has done well throughout all of this. They, the start of the year, they were super tight, lots of competition, low inventory, and even last month I was talking to an agent that's been watching out there. They're coming into multiple offers again. I think there was 16 at one of the ones that he had a client shopping at. So Durham holding up pretty well overall. We're looking at 830,000 for their median price, down just slightly month over month. Sold listings up considerably to 888. New listings 1,766, which is down 10% month over month. So tightening there as we have less inventory hitting the market, and you see the months of inventory drop off because of it.
That's a very competitive months of inventory for the Durham region for sure.
It is. All right, Pickering across all home types, again, just down slightly in median price to 925. Sold listings up to 146. New listings down just slightly. Days on market up a little bit. And our months of inventory down considerably because of that big jump that we saw in sold listings and the slight decline there in new listings. So not bad for Pickering. And when we take a look at it in terms of the price brackets, that I think again that 0 to 750 is starting to disappear. We had it in there early in the year because there was units there. I think that's seemingly gone at this point. And then when we come up to our 750 to the million mark, increase in our year over year sales, but we're not seeing the tight market that we've seen in a few others with the lower inventory. By the time you get to the million mark to the 125, you're back up at 5 months worth of inventory.
Yep.
2 million really stacking, 27 available, only 1 sale last month. And 60 there in the 125. It's interesting because in these price brackets earlier in the year, around that million mark, months of inventory, I want to say was like 2, maybe even below 2. And then the bracket above it was hovering around like 4 or 5. And we were talking about great time to make that move up jump. And that opportunity seems to have disappeared a little bit in Pickering right now in those price points. So again, that's so important why you need to take a look at this data every single month and see where the opportunities are. Because just because it's there 1 month doesn't mean it's going to be there afterwards. And it depends on the amount of inventory that's hitting the market and where buyers are seeing value. And I think that chance has gone there for that move up, at least in the lens that we saw it earlier in the year.
Yep. No, I fully agree.
Yeah. I like it in terms of the opportunity that you can see, but not there at the moment. I didn't see anything drastically that stood out for me where it's like, hey, this is where you have to buy right now. I think it's more so about just watching, making sure that you're pricing correctly. I do believe that in a lot of markets, there still is good opportunity for those move up purchases. But, Matt, we've been talking about this. As the interest rates start to happen, as the cuts happen and buyers return to the market, that gap is going to widen. We're not going to see that same opportunity to capitalize truly on a move up purchase. So I'm wondering if what we're seeing here in Pickering right now is a little bit of foreshadowing in terms of that time being gone. And really only time will tell in terms of what we see next month. And especially, I'm really curious to know how we're going to start out in 2025, especially if we're going to have 3 more cuts between, at least 3 more quarter point cuts between now and March.
Yeah, I think the data is suggesting at the moment that we're going to have a better spring than we did last year.
Yeah.
And if you're looking to do a move up, maybe now November, December, January is the time to start looking for that move. Because you know what, you might have a lot more competition when it comes to the spring.
Yeah. Yeah. And if we're taking a look at historically when it's been fantastic, especially over the last couple of years, that January, February, when there's almost no inventory out there for people, we've been joking that the second week of January has just been fantastic. And if the trend continues, are you going to have to move to the first Monday after all the holidays to make sure you beat everybody to the market? Because
Exactly.
honestly, with that low inventory, and one of our coaches at PSN Coaching, Mike Russo, monitors this every week as he watches inventory levels, specifically in markets that he's working, like Aurora and Newmarket. And you can tell when those inventory levels creep up, he sees that, of course, multiple offers are no longer working. We're seeing homes sit. He knows about how much he can negotiate down from current list prices. And then as soon as he drops below that threshold in terms of active listings, he sees multiples start picking up. Even if they're not planned, even if they're not orchestrated offer nights, people all of a sudden start showing up at the same listing because that inventory level has dropped. So we're going to watch for that in January and February. We're going to see those inventory levels drop. The question will be, will they drop low enough, and will there be enough buyers there to really make a beneficial time for sellers?
Yeah, I agree.
Beautiful. All right, everyone. That is our market update for the month of November as we look back at what happened in October. Stay tuned for more. Matt and I are always taking a look at what's happening in the news and watching specifically the policy changes that our government is invoking to help spur along this market, what they're going to do that will have repercussions for our market, as well as, of course, on the financing side. We had Nicole on from Mortgage Ease last week. It's fantastic to hear her take on all of this. So please stay tuned. We look forward to educating you more on what we're seeing going on as we break down the numbers. Thank you so much for joining us, and we'll see you next week.
Thanks, guys.